Hi everyone, we're here with Paul Graham, Head of Dental at Christie Co. Paul, you're joining us for the third time on this show. For those who have missed you before, I was wondering if you could reintroduce yourself and also let everyone know what Christie's Dental Market Review is. You've just released the 2023 version, and that's what we're here to discuss today.
Indeed. Thank you, James. Great to be back on again. My name is Paul Graham. I'm Head of Dental at Christie Co. Christie Co, a firm of surveyors and brokers who value and sell dental practices throughout the UK. We act for clients who might be selling a single site up to large portfolio divestments for corporate owners. So we've got a real broad approach to the transactional activity in the marketplace. The two sectors that we cover there, so the two industries that we cover with the brokerage side and the valuation side, gives us a really unique insight into the trends emerging in the UK. Christie Co are the only RICS regulated agent valuing and selling dental practices. And we bring that data together along with our colleagues in consultancy and form our dental market review. And that will touch on some of the trends in 2022. And as we move into 23 this year, just to see how the market has been progressing, what's been tracking well, the ups and downs, and not just about painting a kind of rosy picture. This gives a very realistic view and lens into the UK dental market.
Fantastic. So obviously regular viewers and listeners would have seen you on the show before at the beginning of each year for the last 2 years now, discussing your business outlook report. How does that differ from the dental market review? And does the dental market review kind of inform the business outlook that you put together for the beginning of the next year?
It does. I would say business outlook is more of a high level, soft touch approach on what we're anticipating as some of the trends for 2023. Our dental market review is a lot more granular. It goes into a lot more depth. We use the stats that we've got for the previous year and into the rolling 12-month period. Bringing that data together, for example, has allowed us to look at 12 months to June 23, where our specialist teams valued or sold over 585 dental practices and an aggregate value in excess of £610 million. So there's been really rich data for us to delve into and pick out some of the trends that have resulted on the back of that transactional activity.
And so what time period exactly does the 2023 edition cover?
Yeah, so it will give a full review of 2022, and this year with the 2023 element, we've brought that right up to date. Some of the statistical information has been for half year, but we've gone on to just talk about what Q3 has performed like, and also a bit of anticipation into what to expect for Q4, the remainder of 2023.
Oh, brilliant. So it's really up to date then. I mean,
In
terms of, I mean, obviously the tail end of last year, I think everyone knows what happened and obviously the turmoil it created. Obviously, I mean, as kind of the years progressed, it necessarily look as if it's just the UK that's kind of been kind of suffering. Obviously, there's been, kind of global crises and, kind of things have been affecting the markets worldwide. Obviously, I think it was safe to say it was sped up or maybe kind of slightly worsened here. Is that kind of your view as well?
Yeah, indeed. I think when we really get under the skin of probably what happened in 2022, we had a fantastic year for 7-8 months, and then just coming into Q4 of 2022, things just started to just change ever so slightly. Some of the rhetoric, some of the messaging externally, people were just starting to spectate what was going on. There were certain pockets of the market that were still performing incredibly well. others, other areas that were just a little bit more sensitive to some of the news that was emerging. The mini budget, of course, and that seemed to be almost a catalyst for then what was appearing as we moved into 2023, where deal activity H1 2023 was still active, but by no means close to the significant volumes of 2022. There was a couple of reasons for that. There was less sellers coming to the market, and when buyers are ultimately in place looking to acquire a dental practice, they do their due diligence, they take their time, they review. And I would say those buyers were still present, but instead of taking 3, 4 months, 5 months to do a deal, it was 7, 8, 9, 10 months to do a deal. They were just taking a little bit more of a microscopic view in terms of the due diligence, and ultimately making sure that the sensitivities in the market, rising costs, recruitment challenges, etc., looking at a business that was performing at a certain point in time, the advice and the review of those buyers who were acquiring, they wanted to find out if that business was still going to be performing that way in 12 months' time as well. So almost just kind of a bit of crystal ball gazing, looking ahead and seeing how sustainable that business was going to be.
But for anyone listening who's thinking about buying a practice, how does that crystal ball gazing work? I mean, how do you kind of do that extra due diligence, especially with the market being so tumultuous at the moment?
Yeah, I think it at times it can be very difficult. You are almost kind of second guessing what's happening in the market, and some of the messaging, rising costs, the consumer spend squeeze, all these things were playing a part into almost the erosion of some of the transactional activity that was taking place in the market. I would say from the summer, summer this year, that has definitely improved. We're just seeing things just settle down a little bit more. The market has had this, I would describe as a bit of a healthy recalibration. Sellers are no longer thinking, I'll not come back to the market just now, I'll wait until the market returns. Sellers now recognize this is the market. Actually, what we were seeing in 2022, particularly at the beginning, was this extreme bubble of activity. Some incredible deals were taking place, practices being sold on 6 months annualized revenue. The deal mechanics in a particular transaction were very favorable for the seller because there was ultimately a huge increase in buyer activity, and some of those buyers were acquiring to then sell as well, particularly at the corporate level. So it was a perfect storm for some of those sellers, and the market got very used to what that looked like. And ultimately, I think now taking a bit of a helicopter view of that isn't the norm. That's not sustainable. We could even go a step further and kind of look at interest rates as well, being historically low in years gone by. Is that normal? I would say it's not. And actually, where we are just now in the market, there's a mindset shift. Mindset has to change to recognise that, generally speaking, cost of borrowing, particularly in comparison to as history would show, is still relatively cheap. But with that, there has to be a sensible approach in appraising practices. So when we're bringing practices to the market, rising cost of capital ultimately impacts values, and that can be the same for any sector. But it's certainly not crashed. I think it just has to have this, again, as I described, healthy recalibration, this mindset change, and we're now seeing those practices re-emerge, come to the market, and find some excellent results from the buyers who are ultimately out there. The market's been dominated by independent buyers, first-time buyers, and independent multi-site operators. The corporate activity, which is always the kind of smaller slice of the pie, smaller slice of activity there, despite what press suggests and the perception that the corporates are acquiring everything. they're not. The consolidation that corporates have is very much the top slice of dental practices. And I would say their criteria for acquiring has become even more specific. And so ultimately, I think what that will lead to, and we've seen this trend emerge in 23, and I think is going to be for the foreseeable, is less corporate deal activity, and definitely an abundance of more mainstream activity from first-time buyers and almost the kind of mini corporates I would describe. So it's the independent operator with 10, 15, 20 sites. They want to become the next corporate, the next entity that's out there. And we've seen those emerge and have a starting point at a period of time. And then all of a sudden get to 50 sites, 100 sites. There's some very ambitious small micro corporates out there.
They're kind of those that are building up towards it and kind of building their business from the ground up.
Indeed.
With regards to the corporates, is it a case that they've become a little more risk adverse? They've obviously they have however many sites that they have, nationwide, but they don't necessarily want to add to it with inflated costs at the moment.
Yeah, and it's exactly that, James. I think their strategy for acquiring has probably just become a little bit more specific and less scattergun approach, where the sensitivities that they will see is location, recruitment challenges, sustainability, and ultimately, if that practice fits the criteria, then they're still going to be active. We're still doing deals just now to all of the major corporates out there. I think from a seller's perspective, where there might have been a practice of that size and scale, and ultimately you would be thinking of a couple of those corporates on speed dial that you could go to straight away. I think now that's been challenged more than ever before, because those emerging corporates, that layer of buyers just underneath the corporates, are very acquisitive. So sellers still have options. And we're specifically talking about practices of a certain size and scale there that attract corporate activity. Again, that probably accounts for about 20% of transactional activity in the market just now. It's very much the kind of smaller proportion. The mainstream market, the kind of core independent market, if you like, very much being still transacted to a fellow dentist buying their first practice or buying their second, third, fourth practice. They're still using traditional bank lending. They surround themselves with advisors. They're keen to secure the future within dentistry and ultimately buying their own practice. And I think that's a great position to be in the marketplace just now. That definitely accounts for the bulk of activity, and those who are acquiring those practices, doing so with a vision that they're taking a very good business on and making improvements to make it even better. So I think quite exciting times for that independent landscape.
Excellent. Well, that's what we like to hear, a bit of excitement in our future. Obviously 2022 was a kind of a real boom year. I mean, if I remember rightly, it was a record year in many ways, wasn't it?
It was. A phenomenal year. And, right across all deal types, small single asset sites to large portfolios. Some of the transactions that were taking place in that time, because these practices were having the best months and years of income, the kind of trends that were emerging there, almost away from the NHS, private income was booming. That was a kind of great time for those who were selling at that stage.
So was it always kind of anticipated with that record year that there might be a bit of a sort of a decline this year, perhaps even without mini budgets, interest rate rises, cost of living and working increases? Was that kind of always anticipated?
Yeah, I think knowing that on the back of the pandemic, 2021 was a record year, into 22, certain events happening in the market at that time amongst corporates who were effectively acquiring aggressively to then sell, it did seem very likely that 2023 was just going to almost stabilize. But I think where some of the rhetoric and messaging in the market has become a little bit cloudy is when people describe that healthy recalibration as a bit of a market crash, or the market's collapsed and things are going horribly wrong, there's less deal activity. Actually, I think if we just take stock of what 2023 has been like, and we look at some of the really successful years pre-pandemic, 2018, 2019, this is almost effectively where we are now. That deal activity is still available. Buyers are still out there. Banks are still lending. They see it as a green light sector. The approach that a seller should take, though, is just to be a little bit more organized, a little bit more prepared for that. Deal times can take a little bit longer. Understandably, a buyer, their advisors, their lender, just looking at what's being acquired, just getting under the skin of it a little bit more. And that's natural, I think, as these sensitivities in the market emerge. These hurdles just take a little bit longer to overcome. But where we are just now, I think we've got a marketplace that is going to continue tracking forward. We have seen this year, especially as corporates have slowed down their acquisition plans, they've taken review of their existing portfolios. It's almost been the year of corporate divestment. There's been a bit of a stigma attached to corporate divestments in years gone by. This year has been a great success, and I would encourage anybody who is slowing down their growth strategy to review the existing portfolio, to recognise what's working, what's not, what do we need to sell in order to reinvest. Because the independent buyer market that is now there, ready to acquire and take on those practices, even some that may be loss-making, to reshape, reform them, improve them. It's that appetite is there in abundance just now, and that's been really exciting to see these transactions effectively being sold to dentists as opposed to being swallowed up into the corporate stratosphere. It's nice to see that fellow dentists are acquiring practices, and that I think that is going to be something we'll see for the foreseeable.
I say it all sounds a lot more positive than perhaps some people might have kind of anticipated at the start of the year.
I think it is, James. Well, I don't think the stats really speak for itself. When you take a look at the review and some of those deal volumes that are taking place and the aggregate number of transactions that are happening, the market is still very much moving. And at times, yes, that perception can be things aren't great out there, and you kind of pick up the BBC News and you kind of get that sense almost immediately, don't you? But actually, when a seller has the correct approach to thinking about exiting their strategy for sale, whether that be to sell on day one and sail off into the sunset, or to sell but remain on post-transaction, post-sale for a period of time, there's so many options, there's so many buyers out there that will still look at that. It comes back to one really crucial point, though, and it's pricing. Pricing has to be correct. This is not about pricing under market level, but it's very much about not pricing over and above what's achievable. That you have to be real. A seller has to be realistic in this marketplace just now.
Yeah, and I guess that's a key takeaway for people listening that are thinking of selling to take on board. What are the other kind of main takeaways you'd say dentists and practice owners either looking to sell or even those looking to buy should sort of take from the review?
Yeah, I think for those who are looking to buy, let's kind of take that question first. Coming into a market that is moving incredibly quickly, has changed from where it was 2 years ago. A buyer should be surrounding themselves with good advisors. Take time, take stock to review what they can afford, get advice from the bank or the finance broker, and start to just kind of draw up a list of what fits, what suits, and what doesn't. But be realistic is vital. There won't be the perfect practice out there either. So I think buyers have to realise that if something's kind of 80% there and works, that's a great opportunity, and he or she can make those changes to improve that business. From a seller's perspective, and this is ultimately our client base, those who we act for exclusively when we're bringing to the market to sell, it's amazing how many times we'll meet a seller who will say to us, an owner who's not quite ready to sell. They'll say it's a few years away before I do anything. That is music to our ears. If there's a practice owner out there who's thinking it's going to be 5 years before I'm thinking about selling, start taking the advice and find out from the Christie Co agent who lives and works in the region the trends in the market, what's happening locally. Allow us to give you that pricing advice. Get to know us, allow us to get to know them. And so that would be the key takeaway for sellers. Give time to the process.
I guess that maximizes the value of your practice when you do come to sell, ultimately.
It really does. It really does. There will always be occasions where a practice owner has come to us and says, look, I've fallen out of love with dentistry. I want to sell and I want to be out in 6 months' time. There's still options there, and success can be achieved. But I think to really give time to the process, that's going to maximize the end result.
Brilliant. Well, we'll make sure there's a link to the Dental Market Review 2023 in the episode description, so anyone listening or watching can find that easily. But where can people find out a little more information if they need to, as well as about yourself?
Yeah, the Dental Review is on our website, Christie.com. There's a dental section there. The Dental Review is signposted very clearly. At that point, in the review, our contact details are there. My contact details are there as well. And for those who are looking at it, and even if it's just some early advice or speculative questions that they may have, they're very welcome to get in touch.
Fantastic. Well, thank you for joining us again today, Paul. It's always great to have you on. I think you're our first free-time guest as well, so congratulations.
Thank you.